Welcome to the Week Ahead, brought to you by Inverse. Investing makes sense when you learn by doing. Here are the main events this week that are worth keeping an eye on. The Fed is almost certain to hold rates on Wednesday, but the decision is overshadowed by a more complicated backdrop. Inflation remains stubborn while the economy shows signs of fatigue. With no room to hike and no justification to cut, the real story will be the tone of the statement and the updated projections. The Bank of Canada is widely expected to hold rates this week, but Monday's CPI release could be the final piece of evidence that opens the door to a cut. Inflation has cooled meaningfully, and the broader trend is moving steadily toward the bank's comfort zone. At the same time, the economy is clearly losing momentum. Job growth has weakened, consumers are stretched, and business sentiment is soft. Put together, the data suggests the bank has genuine latitude to ease and might start feeling comfortable enough to leave a toothbrush in your bathroom. Wednesday's PPI report lands just hours before the Fed's rate decision and will be watched closely for confirmation of a trend that began last month. Producer-side inflation showed a mild but noticeable reacceleration in the previous release. Not alarming, but not moving in the right direction either. With the Fed already stuck between stubborn consumer inflation and a softening economy, any renewed pressure in PPI would reinforce the case for caution and could subtly influence the tone of the statement or Powell's press conference. Markets will be looking for signs of whether last month's uptick was a one-off or the start of a broader firming in pipeline inflation. It's another light week for corporate results, but one name does stand out: FedEx. As a major component of the transportation sector, FedEx offers a valuable read on global shipping volumes, fuel costs, and the health of goods demand. Its results often act as a real-time pulse check on both consumer activity and industrial momentum. In our sector spotlight, Consumer Services steps into focus this week with Darden Restaurants and Carnival offering a timely read on how services inflation is filtering through to earnings. This is the part of the economy where price pressures have proven the most persistent. Wages, food services, travel, and leisure all remain structurally more expensive than before the pandemic. After 2 weeks of negative year-over-year earnings growth across the broader market, these results will help clarify whether services-oriented companies are holding their margins or starting to feel the strain of slower demand and elevated costs. In this analyst's opinion, the economic situation is deteriorating, and that reality can't help but feed into equity markets. Markets are still digesting softer growth data, and the uncertainty and disruption stemming from the war are adding another layer of caution. If that wasn't adding enough flatulence, the specter of stagflation is becoming harder to ignore as energy, shipping, and services side costs remain elevated, while growth indicators cool. Adding to this backdrop, some of the biggest players in AI are preparing to face off in court, with Elon Musk's lawsuit against OpenAI and Microsoft for hurting his feelings, moving toward a 2026 trial. The case introduces a new source of volatility for one of the market's most influential sectors that has been carrying much of the market's momentum and providing untold numbers of fingers and unnatural limbs. None of these developments are decisive on their own, but together they create a landscape where sentiment can turn quickly. For investors, the challenge this week is navigating a market increasingly sensitive to any sign that inflation is reaccelerating or that growth is losing further momentum. Well, that's all for the week ahead. Remember, folks, when dealing with a sensitive market, it's best to practice deep listening. Don't try and offer solutions, just mirror back what the market says. For example, if the market says, "I think the AI sector is overleveraged," say, "What I'm hearing is you feel the AI build-out is a black hole of capital." And of course, always maintain eye contact and avoid large arm gestures.